talk now to Nina Skero, who's Chief Executive at the Centre for Economics and Business Research. Good to see you again, Nina. Welcome back to the programme. So lots of central bank moves to talk about. Let's start with the Bank of England. No change there on interest rates, but when might there be?
I think we're getting pretty close. So I think the clearest sign yet that the Bank of England is getting close to making a cut is the changing in how the members of the Monetary Policy Committee are voting. So today we saw none of the MPC members voting for a rate hike. We saw 8 votes to hold and 1 vote to cut. So it seems like there is this gradual shift in what the policymakers think is the right decision. So I think not much longer. We're expecting a rate cut in June.
And we had some new inflation figures, inflation falling. When will that start to play into things, do you think?
Well, the inflation, it's a bit of a complicated picture because on the one hand, we're having inflation soften quite a bit. We're expecting that trend to very much continue, especially into April, given the changes in energy prices, which will play a big part. So inflation on the one hand, it's still well above target, but it is firmly on a downward trajectory. So I think it's those two opposing dynamics that the policymakers are keeping in mind. But almost certainly in April, we're going to see a big downtick in the rate of inflation, which we think is what's going to ultimately drive the Bank of England to that June rate cut.
All right, well, let's move to Switzerland then, where the bank cut its interest rate, the first major economy to do so. How significant is that, and does it change anything for other economies?
Well, it's gotten quite a bit of coverage because of that surprise element. I think a big consideration there has been the strength of the currency, and that the bank has sort of felt comfortable saying we've essentially won this fight against inflation, and we now need to consider a wider set of measures, including what the strength of the currency means for the country and the country's exporters. So they clearly judged that actually now is the right time rather than in a few months' time. And I suspect that other central banks around the world probably aren't far behind in making a similar judgment.
Of course, the US Fed is the one that everybody watches. They've now made clear signals about what they plan to do. What does it say about the US economy and the shape that that's in?
So what we saw in the Fed's most recent comms is not a lot of change in its intentions, in its outlook for 2024. But what they have indicated is that they now judge that fewer cuts will be appropriate in 2025. So they were previously suggesting 100 basis points hikes, so basically a full percentage points, and that has changed to 75 basis points, so probably 3 cuts of 25 basis points each. That's for 2025. And I think the reason for that is that what's happening in the U.S. economy is that it's doing quite well. The Fed has changed its language on its assessment of the labor market to basically say that the labor market is actually holding up quite well given the high level of interest rates. So overall, it's very much a picture of strength across the Atlantic, which is why the Fed is saying, right, we still think the economy is doing quite well. It will be appropriate to cut interest rates this year, but not to cut them as much the year after.
Nina, good to talk to you. Thank you for joining us today. That's Nina Skero from the Centre for Economics and Business Research.